Now, to be honest, at one point I did look at JEPQ, the JP Morgan NASDAQ Equity Premium Income ETF, as sort of the gold standard of high income ETFs across the entire market. Now, this was simply because JEPQ offers exposure to a high quality underlying index, the NASDAQ 100, which has done very well over time and is relatively high beta, offering investors a lot more yield. When funds like JEPQ utilize an option strategy, which has the potential to pay investors a ton every month in income. But it's not only that, JEPQ has not decayed whatsoever over time since inception. It's actually grown around 13%, which is definitely sort of a bonus, especially when JEPQ's primary objective is, of course, to seek current income. But with more and more different strategies and ETFs coming out like crazy these days, there are different ETFs that I personally now prefer more compared to JEPQ for several different reasons. So if you want to see all the different high income ETFs I personally prefer compared to JEPQ these days, well then make sure to stick around, drop a link down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now first, let me make this very clear. Just because I now prefer other high income ETFs compared to JEPQ a little bit more, it does not mean that JEPQ is a bad ETF. I personally still hold a ton of JEPQ in my long-term portfolio, but there's just other names I like more these days. Now, some of the main reasons I like these other ETFs compared to JEPQ is because they offer maybe some of these reasons, maybe all these reasons, but each one of these ETFs offers something right here. It could be the fact that some of these ETFs offer a much higher yield than JEPQ. JEPQ offers around a 9%, 10%, 11% yield depending on when you're looking at the time frame, which is not bad whatsoever. That's definitely still high yield, but some of these high income ETFs these days are definitely offering a little bit more cash flow. Also, some of the ETFs I'm going to share with you guys do have a potential for more upside. And this is going to be due to the strategy that the ETFs use. For example, some of the ETFs I'm going to share with you guys dynamically sell calls, which means there's going to be more upside if the underlying equities or underlying index moves up in price quickly. The next reason is definitely a big one for me, the tax treatment, ROC, return of capital. There's lots of different high income ETFs these days that do pay their distributions largely in the form of return of capital, which because I currently invest in a taxable brokerage account, return of capital is definitely something that I'm seeking. Also, underlying, whether it's an index or a basket of single stocks, that could be a reason I like these more than JEPQ. And lastly, sort of a small reason, but still a reason, is the fact that JEPQ does not necessarily offer very consistent payouts. One month could be 40 cents, the next month could be 63 cents. Sure, if you annualize out JEPQ's payouts, they're pretty consistent, around 10%, 11% yield, but getting paid consistent payouts is something that I personally enjoy. Now, the first high income ETF that I prefer compared to JEPQ is going to be SPYI, which offers S&P 500 high income exposure and offers around a 12% distribution rate. SPYI generates income from investing in the constituents of the S&P and then implementing a data-driven call option strategy. Some of the main takeaways for SPYI that I like a lot more than JEPQ is the fact that the distributions every single month, more or less, are pretty consistent around that 12% range. So in this case, around 50 cents, 51 cents, maybe a little bit more, a little bit less every single month. But also SPYI pays a large portion, if not the entire portion at times, of their distributions in the form of return of capital. SPYI is not decayed whatsoever. It's offered on a 12% yield. This ETF is one of my favorites, especially compared to JEPQ. Another ETF that I prefer on top of JEPQ these days is going to be GPIX, another S&P 500 premium income ETF. This one a little bit different, only offering around an 8% yield, so it is lower than that of JEPQ. But because this ETF dynamically sells call options, there's going to be more potential for upside, which this ETF stacked up next to JEPQ has destroyed JEPQ over multiple different time frames. Now, as a side note, before we go through the next few ETFs that I do prefer over JEPQ these days, if you guys want to see me dig deep into any of these different ETFs, that's all I talk about on my channel. So after this video, check out some other videos if you want to see that. Another ETF that I definitely prefer over JEPQ, this one's sort of head-to-head with it because it offers that NASDAQ 100 high income exposure also, is going to be the NEOS NASDAQ 100 high income ETF, which offers around a 14.5% distribution rate. Now, if you like JEPQ, you're probably going to like this one also because it does offer you that NASDAQ 100 exposure through a high income strategy. But this ETF, unlike JEPQ, offers a ton of the distributions in the form of ROC. And on top of that, looking at the distributions, every single month, more or less 60 cents, 62 cents on average, which is super nice. A few more ETFs that I do prefer to JEPQ these days is going to be SPYI, the S&P 500 high income ETF. This ETF targets high income. It offers around a 12% yield, so you are getting a nice amount of cash flow with this one. It also offers a large amount of upside and tries to correlate pretty closely with the same total returns as the S&P 500 in the long term. Another ETF that I've been seeing a ton of investors actually selling JEPQ for is going to be QDVO, the Amplify CWP Growth and Income ETF. This ETF does not track the NASDAQ or the S&P, but instead a small basket of holdings, 43 different individual stocks, which are relatively high beta names, and then sells covered calls and individual names to generate around 9% as far as yield goes, but also the upside with QDVO has been massive and can be massive because, again, the entire portfolio is not hedged. The last few ETFs that I do personally prefer to JEPQ is going to be the Goldman Sachs NASDAQ 100 Premium Income ETF. This ETF, as you see, offers NASDAQ 100 exposure through a high income strategy, around 10% yield with this one, so pretty close to what JEPQ offers. The difference is this ETF, because of the strategy, can provide a lot more upside in certain market conditions, at least in my opinion. Now, the last ETF that I prefer these days to JEPQ is the iShares Advantage Large Cap Income ETF, BALI. This ETF offers large cap income equity exposure. The yield with this one is around 8.5%, but again, the upside is definitely there with this one also. So those are several different ETFs that I do prefer compared to JEPQ these days. Like I said, I also still like JEPQ. I still hold it. The problem is these days, or maybe the good thing is these days, there's just so many great products across the market that pretty much offer exactly what every single investor is looking for. If you want NASDAQ 100 exposure, for example, and you want to generate a ton of income, there's definitely ETFs out there. If you want a little bit more upside and a little bit less income, there's also ETFs out there for that. If you're seeking ROC or if you're seeking more consistent payouts, there's also ETFs out there for that. All in all, it just takes some research, some digging to figure out which ETFs are offering more or less what you're looking for, but I promise you guys, there's definitely going to be something out there for you. So now that I share with you guys some of my favorite ETFs that I do like these days more than JEPQ, even though I still do like the ETF, I lastly, most importantly, have a question for you guys down below. When it comes to high income ETFs across the market as of right now, what's your number one favorite ETF and why? Let us know down below in the comments. If you enjoyed this video, make sure to please drop a like on it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.